Matrixport is a financial services platform specializing in cryptocurrency, founded in 2019 by Jihan Wu and John D., who were also co-founders of Bitmain. A leading maker of cryptocurrency mining hardware, Matrixport offers a range of services. These include cryptocurrency trading, custody, lending, and structured products. The platform aims to make digital asset management and financial services accessible in a secure and compliant environment. On January 3rd, Bitcoin's value experienced a sharp decline, falling from 9% from $45,510 to $41,454 in just a couple of hours. And this significant fluctuation in Bitcoin's price occurred simultaneously with the publication of a report by Matrixport for its clients. In this report, analysts expressed skepticism regarding the approval of spot Bitcoin ETF proposals by the U.S. Securities and Exchange Commission, which many had anticipated would receive the green light this month. The Matrixport research team pointed out that the current SEC leadership, primarily composed of Democratic commissioners, may not be favorable toward cryptocurrencies. They specifically noted that SEC Chair Gensler's stance on crypto in the U.S. is not very supportive, casting doubt on the likelihood of him endorsing the approval of Bitcoin spot ETFs. This huge drop in Bitcoin's drop, which naturally caused the whole crypto market to start dumping, was blamed by many crypto influencers on the Matrixport analysts who wrote it, and the news outlet that first wrote about it, and top-tier Bitcoin miners have shaken off the Matrixport market manipulation and have gone green or moved back towards break-even. Big money isn't buying this, and Matrixport released two reports today, one claiming ETFs would get approved, one claiming ETFs would get denied. The reason? I changed my mind. It was not the Matrixport opinion that racked the market. It was the Black reporting it as news in response to this anger toward Matrixport for allegedly generating FUD in order to manipulate the crypto market. Matrixport co-founder Jihan Wu took to social media platform X to talk about the independence and expertise of the company's analysts. He emphasized that these analysts operate autonomously, forming their opinions without any influence from the management team. Wu acknowledged that their analytical skills surpass those of himself and other members of the management. He mentioned that his engagement with the recent report was minimal, similar to many others who had only briefly seen its title. And Wu highlighted the work of Marcus, a skilled analyst at Matrixport and the author of Crypto Titans, a book published last year. The book offers a detailed account of the price history of cryptocurrencies, sometimes recalling events more vividly than Wu's own experiences, including those where he faced financial losses. Wu said that at the beginning of 2023, Matrixport was among the few firms that accurately predicted the low point of Bitcoin and maintained a highly optimistic view on the future. Wu pointed out that the recent report, originally intended for Matrixport's clients, gained widespread media attention, an outcome that was not planned by the company and is outside their control. He also noted that Matrixport consistently advises its clients to be cautious of risks and leverage, particularly in light of the market's volatility. Wu claimed that this volatility is driven by expectations surrounding the widely anticipated potential approval by the SEC of spot Bitcoin ETFs, and is reflected in the high funding fees in the perpetual market in recent downturn in crypto-related stocks in the stock market in the days leading up to his statement. And Wu expressed his views on Bitcoin's future, stating that the current volatility and the uncertainty surrounding the approval of a spot Bitcoin ETF in January 2024 are inconsequential for the long run. He believes that Bitcoin will continue to thrive over time. Wu is confident that the SEC's approval of a spot Bitcoin ETF, which he sees as inevitable, will attract new investments into Bitcoin. He envisions Bitcoin further establishing itself as a superior store of value and risk hedging asset, even surpassing gold. Matrixport's analysts operate independently, expressing their opinions without any influence or interference from management. They are employed for their superior analytical skills compared to mine and other management team. I've only briefly glanced at the title of the report. As the day went on, more and more came to the realization that maybe it was not Matrixport's negative report that was to blame for Bitcoin's price drop, but rather the record high Bitcoin perpetual funding rate. Bitcoin price may not be dumping because of Matrixport's view of ETF rejection. It could just a normal pullback on the way up. Just ignore the short term and focus of one medium to longer term. Funny to see people blaming a Matrixport report for the dump. BTC perps funding on Sunday was almost 100% annualized. That's very rare. The definition of a very hot market. And it's down to 110% now. The baseline is when Alex Kruger or any market analyst refers to funding rates causing a correction in the context of Bitcoin or other cryptocurrencies. They are talking about a mechanism unique to perpetual futures contracts in the crypto market. And perpetual futures are a type of derivatives contract that, unlike traditional futures, don't have an expiry date. Traders can hold a position for as long as they want to ensure the price of the perpetual contract stays close to the spot price of the underlying asset. Like Bitcoin, a funding rate mechanism is used. And the funding rate is a periodic payment either paid or received by traders holding positions depending on the direction of their trade, long or short. So when the funding rate is positive, long position holders pays short position holders and vice versa when it's negative. This rate adjusts based on market conditions and the difference between the perpetual contract's price and the spot price. If the funding rate is high, it typically indicates that there's a large number of traders with long positions on the price going up, and this can lead to a situation where it becomes expensive to hold these long positions. When traders close their positions to avoid high funding fees, it can lead to a sudden drop in price, a phenomenon often referred to as a correction, especially if the market is perceived as being over-leveraged or overly bullish. We're sure. And so in this context, Kruger seems to be suggesting that the correction in Bitcoin's price was due to high funding rates, prompting traders to close their long positions rather than being directly caused by the content of Matrixport's report or other external factors. And the Galaxy Digital's head of research, Alex Thorne, offered this criticism of Matrixport's hated report. And bewildering note from Matrixport's several of their supporting arguments are nonsensically of their most confusing and questionable claims that the bull run was kicked off by Franklin Templeton's September ETF and filing. They write, there was now more than one big traditional industry in September 18 and 4.